Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 17th of June. A bit thin on the ground today, as we have been for much of the last couple of months. First off, Cambria Africa, where it looks as though we've had a bear trap rebound from below the 200-day moving average. That's there at 0.31. That little low there down to 0.27, just breaking the initial June support at 0.28.5. Looking for a break, I suppose, really above the 50-day moving average of 0.34. We can get that on a weekly close basis, and breaking that March resistance line, then the target here could be as high as 0.7 pence over the next 2 to 3 months, which is obviously quite an ambitious-looking target. But we did spike before in February, March, and perhaps we'll do it again for June, July. This stage only back below, I suppose, the 0.25 area, really killing the idea of recovery or a rebound for Cambria. Moving along to a stock which has had a one of our favourite setups, the gap close, bear trap gap close that we had just at the end of last month, around 24 pence. Progress up to 28 pence for Chaarat currently, and bouncing off, it appears, bouncing off the 200-day line at 27 pence. The longer we stay above the 200-day line, the greater the chance of a move towards the top of that broadening triangle from November, as high as 34 pence. On to a stock which has had a slightly a negative run of late, let's say, but interesting that Dukemount has now gone back to where it was in early 2019. There was a low there at 0.25 right at the beginning of June, and today's low 0.23 before a little rebound. I suppose if there's an end of day close back above 0.25, we could class that as a bear trap situation. Other points to note here are the RSI well below 20. That was also the case in 2019. Obviously, after that, we had a rebound. And the other point to note, I suppose, really the way that we've had an initial rebound back above that 0.25 low. So a possibility of at least a retest of the low 30s area, which was support on the way down over the course of this week. But obviously not for widows and orphans at this stage. On to a stock which is on a rather better technical footing at the moment, Devco. Here we had one of those narrow bear traps. I think I pointed it out at the time. We had a low there in March around 23 pence, and also in May, and then the shares just had 2-3 days just below that, going down to the what was that, around the 22 pence area. So just bear trapped by a penny or so, and then came back up again. And current situation, looking at support coming in at the 50-day line at 28 pence. The longer we stay above that, the greater the chance over the next 1 to 2 months of a move towards the top of a rising trend channel from July last year, as high as 50 pence, and that could be seen as soon as the end of next month. At this stage, only really back below the initial June resistance of 27.5, really questioning the recovery or the rebound argument for Devco. On to a stock with lots of news today, hopefully in the run-up to the dividend as well for i3 Energy. Here it's interesting that we've had our second gap higher of the month, and so far unfilled. Had an unfilled bear trap gap reversal, as I call it, at the beginning of June, and then the second gap up higher today above the 50-day moving average at 9 pence. The longer we stay above 9 pence, and with no end of day close back below that, the greater the chance of at least a move up towards the top of the rising trend channel from June last year, as high as 12 pence, and that could be seen as soon as the end of next month, and perhaps with a bit of luck by the end of this month. Moving along to Codal, which had some news today, and it's also worth looking at on a charting basis, just spiked up to new highs for 2021, which is always nice. Rising trend channel for the shares at the moment, with its support line running at just under 0.3 pence, and the resistance line could be up to 0.6 pence, perhaps the channel a little bit less steep than that, so maybe the target there towards the low 50s there, but I think the setup here looks encouraging enough to suggest that 0.6 pence could be hit as soon as the end of next month, while we hold above the upper 20s, so maybe the 20-day moving average there at 0.27, above 0.27, looking towards 0.5 to 0.6 for Codel at the moment. A stock which had the word breakthrough in its RNS today, so I highlighted that, and it looks as though there's been a bit of a breakthrough in terms of the shares. Wonderful key reversal to the upside. We already had a bit of bullish divergence in the RSI window, and finally it looks as though the shares could hit the top of this broadening triangle from August last year with a 55 pence target. Obviously that doesn't look too difficult now given the move that we've had, but what will be interesting now is to see whether the shares are not just a one-day wonder. We've had a few of those in the past, back in May last year, and then also in July. So the key here really is that Midatech goes up and stays up. Ideally, any dips are not really back below the 40 pence level on an end-of-day close basis. If you can do that, then one would expect even more than 55 pence from the shares. So looking pretty impressive there. Another impressive looking situation is Prospects Energy, where we had that little gap there through the 200-day moving average a week or so ago. Good key reversal off support there as well for the shares. So the sort of the stars were aligning for a move to the upside. Currently looking for 4 pence by the end of next month, with any weekly close above 2.5 pence. Hopefully sealing the deal on such a move. We're also in the run-up to a golden cross between the 50 and 200-day moving averages. That's the blue and black lines there, and the run-up to that event, at least a week or two before that, tends to be the strongest part of the technical cycle. As I said, a bit thin on the ground today, so just looking at some of the recent favourites. One of them is Sanleon, which now looks to be in a rising trend channel from back in December, heading towards 65 pence, maybe over the next 1 to 2 months. Clearly, we'd like to see an end of day or a weekly close above 45 pence to give us the confidence that such a high target could be hit as soon as the end of next month. But looking pretty strong for the shares, at least while they're above the 50-day line at 39 pence. Finishing off with a stock which the Bulls like to throw stones, the Bears like to throw stones at, Tern PLC, and just looking at the shares and the sort of the configuration here, looks as though we're in a rising trend channel from March, heading towards 40 to 42 pence. Good support at the 20-day line around 22 pence. So ideally, while we're above 22 pence, looking for the 40 pence plus by the end of next month. If you're cautious on the shares, or you are a bear, then maybe wait for the 28 pence resistance line there from May to be broken before assuming that Tern is finally on its way. Just actually want to look at one stock which I've sort of thought of just before I started recording. ZAYN Credit Systems. Interesting here that the shares have been in consolidation for the best part of 6 months, and it looks as though this could be the week where they break that line of resistance from January around 4.8 pence. So end of day close or weekly close above 4.8, or maybe if you want some wiggle room up above 5 pence, could take the stock up to 7.5 pence by the end of next month. Stop loss obviously back below 4 pence at the moment. That's it for me today. More updates tomorrow.